Good morning and welcome to Stock Market Today for Thursday, May 9th, 2019. I'm your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So U.S. equities finished mostly lower in Wednesday's trading, with the S&P 500 down for the third consecutive day. Utilities, financials, and communication services underperformed. Healthcare, REITs, and industrials finished higher. Treasuries were mostly weaker, with the curve steepening. The dollar was a bit weaker on the yen cross. Again, a little bit of a risk-off type trade. Little changed against the euro. Gold down 30 basis points, and WTI crude actually up 1.2% on a bigger than expected inventory draw. Really, the key highlight is that trade tensions continue to weigh on the market. As we get in this morning, S&P futures are down 80 basis points after the index closed lower again on Wednesday. European markets were lower following Asian market weakness overnight. Treasuries are stronger across the curve. Dollar is weaker against the yen. Little changed against the euro. Gold up 30 basis points. WTI crude giving a little bit back, down about 10 basis points here in the early going this morning. As we watch the S&P 500 here, trade tensions continue to pressure markets. That remains the theme of the week. We've identified 2850 as support, then 2800 should that level break. What I will highlight, and what I do highlight this in my note Chaikin Analytics clients today, is if we look at a volume at price study, you can see that if we break through 2850, there's actually a volume pocket in here down to this 2800 level. So a break of 2850 in the near term likely targets 2790 to 2800. For now, resistance remains at the 2940 level, and what we are watching, and we've been watching, is for the RSI to hold above 40. RSI currently above 45, so staying in bullish ranges even as the market sells off. That's a positive development, as is the fact that Chaikin money flow has remained bullish. Now, we'll go in a little bit deeper later in the show about some of the breadth metrics that are giving us pause, but right now, 2850 remains the key level. So what are we talking about today? Note to Chaikin Analytics clients, S&P closes lower for a third consecutive day. Key support at the 2850 level continues to be the line in the sand. That's the level we're watching. Obviously, that's the level that would kind of get us to change our view a little bit. For now, uptrend continues. Seems like a pullback within the context of an uptrend. Momentum remains bullish, but we are watching for 2850. If that level gives way and momentum weakens further, that would be a concern for us, as is weakening breadth. That's starting to become a concern as well. Global stocks weaken further. The ACWI ex-US lost its 50-day moving average, and futures, as we said, do point to a lower open here today. Now, our power bars for the major markets in the U.S., Dow actually eked out a small gain yesterday, 6 bulls to 6 bears, so getting back to that even mark. S&P 500 down marginally, 124 bulls, 82 bears, so deterioration there over the past few days. NASDAQ now no longer greater than 2-to-1 bulls to bears, 19 bulls, 11 bears, down 25 basis points. Small caps were the big underperformer yesterday, not really big, but an underperformer yesterday. 546 bulls, 308 bears. Bonds actually down-ticked yesterday to send yields higher, but as we said, bonds are stronger here this morning. According to the Chaikin Power Bar, large cap stocks and small cap stocks are somewhat bullish. Major indexes here in the U.S. are mixed from a power bar perspective. Looking at our stock of the day now, Microsoft. Computer software services, you know we like that group, continue to like that group. Microsoft was at 125.51 yesterday, relatively unchanged. Power gauge rating, very bullish due to very strong earnings performance and very positive expert activity. 20 factors, 5 in each of these 4 categories, roll out to a very bullish Chaikin power gauge rating. Very bullish stock, strong trend, strong industry group, type of name we want to consider. Market and model now in agreement, have been in agreement pretty much since the February timeframe. Really kind of looking for some opportunities here and looking at the names that are holding up well as the market pulls back, and Microsoft certainly fits that bill. Oversold at this level based on our overbought, oversold indicator, and Chaikin money flow is solidly bullish. So when we look at the stock, it's above the rising long-term trend line, pulling back a little bit after that gap higher on earnings, but Microsoft looks like a compelling setup to the long side of the portfolio. Take a look at Microsoft if you're looking for opportunities on the pullback. Our sector tracker now, looking at the major sectors over the last 5 days: healthcare, staples, discretionary, REITs at the top of the list, comms, financials, energy, middle of the road. Utilities had a tough day yesterday. Let's look for tech to start to outperform again. On top of that, materials have been weak, as we would expect. Trade tensions going away on the materials group, as well as the rising U.S. dollar. We've talked about that at length over the course of the past week or so. Our industry in focus today, capital market services from the financial sector, 27 bulls to 4 bears. Over the past 6 months, capital market subsector has outperformed the S&P 500 by 1.2%. And its power bar ratio, which measures future potential, is very strong, right? 27 bulls, 4 bears. Earns it a rank of number 5 of the 21 subsectors which we track. Some of the indicative names there: Ameriprise Financial, AMP, Northern Trust, NTRS, and Stifel Financial, SF, all have very bullish Chaikin power gauge ratings. So we're going to take a look at one of those names here today. Let's look at Stifel here. Stifel is a very bullish stock, strong trend, strong industry group, type of name we want to consider owning, right? So let's look at the chart from the bottom up. Ribbon at the bottom of the screen tells us where that power gauge rating is and has been. And it's been bullish since the January timeframe. And right around that time, the stock began to outperform, continues to outperform. Intensity of the outperformance actually picking up of late. So another name that's holding up as the market sells off. Currently rounding out of an oversold condition while money flow remains bullish. Stock is above the rising long-term trend line. And we have a clear line in the sand here at the $56 level. Former resistance should become support to any pullback. I think Stifel Financial kind of looks interesting on the long side. Should the market hold above support levels, names like Stifel, names like Microsoft are the types of names that you want to consider owning. Take a look at SF on the long side of your portfolio. Yesterday's S&P 500 gainers and losers. A lot of this was earnings driven. Diamondback Energy, FANG, up 7.76% following their earnings announcement. FLT, add 7% on earnings. MCK, 4.8% following their print, and PXD up nearly 4% after their earnings announcement. Concho, very bearish stock, up 3.75%. Didn't see any real news to drive the trading activity there. On the loser side of the board, taking a look at TripAdvisor here, TRIP, a bearish stock, down over 11% following their earnings announcement. DaVita, also a bearish stock, down 8.5% following their earnings report. Actually tripped a couple of sell signals in Chaikin Analytics here today. Marathon Petroleum, MPC, earnings take that stock down by 7%. Cody, numbers looked okay. Investors didn't like it, down 5.5%. No real news on NRG to send that stock lower by 4.37, call it 4.4% on the day. So our earnings update. We talked about Marathon. They missed by 10 cents, sent the stock lower. Interactive Corp IAC beat by 51 cents. That's a bullish stock that continues to do well. CB Richard Ellis, CBRE, part of that real estate group, beat by 20 cents. Disney beat by 2 cents. Stock not doing much here in the pre-market. Obviously, that's a name that's been on a lot of investors' watch lists after the breakout following their announcement of their pricing on their streaming services. And then, as we said, McKesson, MCK, they beat by 3 cents, and the stock had a positive reaction there. As a read-through on McKesson, Cardinal Health reported this morning. That's a bullish stock, and that stock is trading higher, as is Norwegian Cruise Lines, NCLH, trading higher here this morning following their earnings announcement. Symantec, SYMC, is a bullish stock that is going to report after the close of trading today. Other neutral names after the bell today that are going to be in focus, Wynn. Wynn's highly levered to China, big business in Macau, so be interesting to hear what they have to say tonight after the close. Also, News A, NWSA is a neutral stock reporting after the close tonight. Booking.com, BKNG, is a bearish stock that will be reporting earnings tonight after the close. Chaikin does suggest caution when holding bearish stocks ahead of earnings. So let's kind of dive in a little bit here, see what we're talking about in our note today to Chaikin Analytics clients, and something that's kind of we started to talk about this last week, how breadth metrics were starting to weaken. We showed you the chart of the percentage of stocks in the S&P 500 that were currently trading above their 50-day moving average, and how there was a negative divergence between that metric and the S&P 500 at all-time highs. Similar dynamic at play here in the percentage of stocks making new 52-week highs. What we're looking at here is an 8-day moving average of the percentage of stocks in the S&P 500 making new 52-week highs. And what we can see is that after a rally off the lows with the market, kind of started to go sideways and never quite got above those August, September levels that we saw when the market topped out. So that's another negative divergence here in one of these breadth metrics. It's a new metric that I'm including in my note today, and I wanted to share it, but we can clearly see the high here in the S&P 500 was not confirmed by a high in this moving average of stocks making new 52-week highs. So that's another breadth metrics that continued to weaken and flashed a negative divergence at the recent highs for the S&P 500. Global markets also under pressure. Here's the ACWI XUS, the iShares MSCI ACWI XUS ETF. We watch global markets to get an indication on breadth. In an ideal world, we want to see, markets around the globe relatively in gear. Did not see that throughout most of 2018. As the U.S. market rallied into the highs in 2018, global markets were in a pronounced downtrend. Then everybody kind of got in gear to start 2019. U.S. was doing well. Global markets were doing well also. But now global markets have come under pressure. If you notice, the S&P 500 has held above its 50-day moving average, but the ACWI XUS has lost its 50-day moving average here. So we're going to look to the next level around 45.50, which is support that coincides with the 200-day moving average. At the same time, small negative divergence in the RSI of the ACWI, and we're looking to see if it's going to begin to shift towards bearish ranges. Similar to the S&P 500, the RSI for the ACWI XUS was holding above 50 on pullbacks, and now it has given way. You notice the RSI on the S&P 500 was at 45. Here we're actually below 40, so a bit of a concern, something we're going to keep an eye on here as trade tensions unfold, as the talks unfold today in Washington. We like to see markets in gear, and if global markets start to come under pressure, that could be a potential warning sign for the U.S. as well. So something we're going to keep an eye on. Finally, one of the big themes that we've been on is that as growth slows globally, we think investors are going to favor growth stocks, especially secular growth stocks, over value stocks, and that does remain the case, right? We looked at Microsoft. Microsoft's a name that's an interesting play on this theme, but if we look here at the Russell 3000 Growth Index relative to the Russell 3000 Value Index, we can see a nice breakout out of this consolidation and just a continued move higher. The ratio is above the rising 200-day moving average, so the long-term trend is up. And it's also confirmed by momentum. Here's the RSI of that ratio, and you can see it's routinely held pretty much around that 50 level. It's become overbought a couple of times in the past couple of months and continues to hold in bullish ranges. So thematically, as you're looking for ideas, as the market holds support, when you're looking for individual names, we tend to think it's a good idea to favor the growth names over the value names, and this analysis here kind of bears that out today. Take a look at growth stocks over value stocks. So that's going to wrap it up for today. Head over to chaikinanalytics.com/today. Sign up for that email. Follow along with the show. Daily stock ideas for you to consider, as I said, in your inbox every day before the market opens. I want to give a special thanks to stockcharts.com for hosting this show every day in the 9:15 slot. Also want to give a special thanks to See It Market for posting our work every day on their site. And a special thank you to you all for taking the time out of your day to listen to this show every day. I hope you're finding it useful. If you are, please spread the word, share our link on social media. I will be back here tomorrow. Happy Thursday, everyone. Have a great day.